time again. Time again to start the stream. Aloha, lads and gents. Welcome back to a new episode of A Sense of Capital Crunch Time. Your host of today, as always, is Julian, and I'm very glad to have you in again. Actually, I think at the moment there's only one viewer joined, but that is always how the streams are starting. And even though it's finishing like this, and at least one is viewing it and somehow getting a little bit of entertainment, a little bit additional content, perspective, opinion, whatsoever, I'm already very glad. So guys, today it's Monday, it's feast day actually in Germany, and in Germany, or let's say Central European time, is 5:35 p.m. and in the US Eastern time it's 11:35 a.m. actually, yeah, so quite early for you, quite good time for us, afternoon. If it would not be a feast day, work will be finished, so great momentum, great tailwind. Regular it's different. Regular it's quite late for me to guide those streams because everything is orientated on the closing times of the US stock market and exchanges. But however, today it's different, guys. And why it's different? Because today I will guide the fifth and final company of this earnings season for me, the final company I'm a shareholder of, and it's a Dutch company. Yes, you hear right. Not an exotic one, not a classic one which is located in the US. No, this stock is actually located, or this company, in the Netherlands. Yeah, and what is this company? Please give me a quick time to do a zip, and maybe I should adjust a little bit the air condition even lower because it's quite warm in Germany. It's, how much is it? Like, I don't know, 23, 24 degree. If you're not used to it at this times, it's a little bit surprising, but a good surprise, as you can see. Okay, guys, maybe I start as always with a quick introduction. Before I start with the introduction, I'll brief you a little bit about the company and some additional aspects. I just want to let you know quickly that in the in the upcoming minutes, this will not be any financial advice, consultation whatsoever, and there is no guarantee for any correctness of the provided data, guys. Yeah? So always make sure you do your own due diligence, evaluation, research process, and of course making a decision on your own opinion. That's very important. And what else is important is that the results very likely will get released in 24 minutes. So 6 p.m. Central European time or 12 a.m. Eastern time. So guys, as always, we need to rush a little bit, but just a little bit. I think this time we are actually quite on time. Maybe I should not promise anything what I can't later on hold. So one moment, please. There you go. You can see my screen, I guess. And I think I should make it a little bit smaller and adjust it. So what we can see here is the website of this company, this magical triangle company. And why I'm talking about this electricity, I'm not sure how to this electrical grid triangle magic vendor company out of Netherlands named Alfen. Why I state this video? Because basically I really see a very promising, valuable triangle which get provided by this company. Triangle because 3 different major segments get supplied. So you can see the separation here in the website, and this is basically the whole call, the whole earnings results, everything is very straight separated in these 3 product types. So the first one, as you can see, is smart grid solutions. So in this regard, we're actually talking about substations. Yeah, no matter if are smaller ones, larger ones, customized ones, as you can see here, even ones where you can enter it by a door really and stand inside of it, all kinds of different substations which get installed in wind farms, in solar and PV farms, hydro farms, hydro energy, in cities, to just cover the regular electrical grid demand. All this kind of substations get provided by Alfen, but just in 4 countries. Yeah. So I mean, they are the home market, Netherlands, Belgium, and then I think 2 more Scandinavian countries. I think Finland and something else. So just 4 countries. But this is not all. So Substation is really the legacy business. The company was founded originally in 1937, and in 2008 they've decided to launch another quite valuable product, which developed very, very well in the past years, especially 2-3 years ago. And these are the EV charging solutions, as you can see here. And important to notice here, in general, you can see already with the substations, and you will see it later with the energy storage solutions, but this business is highly focused on B2B, so on other business customers, not on private personal customers like me. Yeah. So yes, you can buy EV charging solutions of them for your private house or apartment or whatsoever where you want to install them, but it's more for companies, you know, for governments, for cities, for public areas where they need to get installed. These are the major targeting customers for Alfen. And you can see here, yes, they're staying at home, but I expect, or at least my feeling is, way more customers in the business space. Why? One reason is already that the pricing is quite high. I can imagine that when you do research as a private customer, maybe you quicker decide to save 50% or something like this and buy a solution which is not high quality premium. And Alfen is positioned themselves a little bit like a premium, like a pioneer company, like very well equipped with high quality hardware and software and servers. So I think those are 3 aspects which you need to consider. And so therefore everything which you can purchase at Alfen is a little bit more expensive as well, because it's made in the Netherlands, yeah, which is very rare nowadays. A lot of companies sourcing out. Who knows when Alfen will go for the step as well. But so far, of course, this kind of aspects are priced in their solutions, and therefore, of course, I think on a price level they are not competitive to China, to Chinese company or something like this. Yeah, I think there is not a big question about it. However, doesn't mean too negative aspect from my side. So we have at-home solutions, at work and public charging solutions, and you can see there's a certain portfolio. You start with a very simple one, then one with a simple one with attached with a screen, then a double plug simple one or double socket simple one, and then it's getting already into this public area. I mean, this one is very likely, this one, the first 2 are very likely more the private focused ones. This one already starts for the business, I think. And now it's getting really more focused on public solutions, especially those twin solutions. You can see they're a little bit more solid with a metal cage and this kind of aspect. So for sure something which provides a little bit more security for public utilization. And then last but not least, we have so smart grid is the legacy business. EV charging is 2008 launched, and now we come to the rising star, yeah. And that is basically the energy storage solution business. As you can see here, we're talking about energy storage solutions which are installed in cabinets, and they can be mobile, which is called, at this case, the battery mobile X, or they can get installed on a solid, long-lasting base, yeah, connected to the ground or something like this, and stationary. We can call it stationary, I guess. And they get they get installed. I mean, we will see later some realistic cases, but the mobile X solution is getting used, for instance, for festivals, for construction work sites, this kind of utilizations. And the solid ones, you see it already in the back at this footage, for wind farms, for solar farms. That's more a reasonable utilization case. I can see it already here, but I don't want to show now the video. So basically it's very simple. I mean, compared to other companies I'm guiding, and of course even though are not that complex, because I would never invest in a company I don't understand and or I not even superficially understand. And I mean, Alfen for me it's still the simplest one, even though the others are not, I think, that complicated to understand. But really, as soon as you understand smart grids is substations, EV charging are chargers, and energy storage are batteries, then you already know what is primarily Alfen doing and how they, what is their income sources, or what are their income sources. And that's the triangle I try to illustrate before we jump deeper in. So guys, I'm a little bit in a more crowded place this time. It is sometimes how it is. I would say let's go on. And before we go on, let's say we go on with the numbers, just with the superficial numbers, so you get a really superficial idea, really superficial idea. And here we go. I mean, that's first of all the price chart of the past 5 years, and you can see as soon as these EV charger solutions really hit the market more and more, the price rises very aggressively, and then this point in time happened. And it was not that connected like the other companies. Of course it was connected as well to the basic interest rate of the Fed, of the European Central Bank. Yes, that was as well the source of all evil, let's say it like this. But on the other hand, we need to consider that just in general, they sold a huge amount of EV chargers, a huge amount. And I mean, in these days, same with solar panels, same with microinverters, people could get not enough of it, and there was really some supply chain issues for the companies who producing them, but as well for the customers. And so there was a certain point of time that really companies overproduced their solutions, and the market, because of the changing interest rate situations and missing funding programs, the market was full of this kind of solutions, especially EV charger solutions, and then it dropped heavily. Yeah, so it was quite unexpected as well for Alfen. They didn't guide it or set the outlook on this kind of setup. I mean, how you should do it. It was difficult and very volatile times for a lot of companies, and a lot of companies suffered, and Alfen actually as well. In my opinion, not that heavily than other companies, but this is what I will show you in a minute when we take a look at the latest earnings results seasons. So quickly, just that you have seen it, we're talking about a market cap of roughly $900 million, even though everything will get stated today in euros. Yeah, that is what you need to keep in mind. So here you see the exchange rate, and it's currently $1 to 0.92 euros. So it's almost 1-to-1, quite simple to calculate. And the price, yes, there's some down and up forces going on, so a little bit volatility is existing, but more or less it's quite stable, yeah, compared to some other exchange rates like US dollar, Brazil real, or something like this. Yeah, you can see it here even on the very long time. Very long it's not, but 20 years you can see it's looking quite solid, I would say. Okay, let's go back to the evaluation, or to the KPIs. You can see, so with a market cap of $900 million, they achieve, it's euros, I think, it's euros. With a market cap of 900 million euros, they accomplish revenue of 405 million euros. Yeah, the price earnings ratio is 30. Quite cheap. Earnings per se, okay, that's not that important, but just to have some rough numbers. I mean, you can see that the market cap revenue ratio is roughly 1-to-2. Yeah, let's keep it simple, and I think that is already a good price actually, from my perspective. I mean, at least it's something where you can look deeper in. It's not like on first glance you think, oh, what the fuck, I don't want to waste my time, it's not worth any minute. So yes, and here you can see the latest earnings results, And yeah, it's because it's very likely it's a smaller company, it's a European company, it's not covered that well by investing.com. But on the other hand, you can see that the revenue is covered very solid and documented and tracked. And here you can see that the latest results more or less all have been greenish, but they had this big back misses. You can see it here perfectly. What you saw on the price chart is illustrated here more or less on the same time, August 2022. So expected revenue almost 100 million, achieved revenue 60 million. Yeah, obvious what then happens with the price of a company like this. Maybe I do it a little bit larger. So I think I don't want that you lose your eye power, your sense. That would be very unfortunate. I don't want to be connected to this kind of trouble. Okay, guys, let's go on. Wait, I share back the screen. Here we go. And so one of my major targets actually in the past was for Alfen, that they trust or that they achieve one more time the trust of the investors, yeah, because they really lost it. You can imagine with all those revenue misses in the past. But in my opinion, they received it already since at least two periods. I mean, Q3 2023, nobody expected it, but they had a record year and they achieved a strong beat, yeah, out of nowhere. But it was for me really positive earnings results, and even though it was another record quarter, Q4 2023, for me it was a neutral rated event. Why? Maybe we go quickly into it and I show it to you. But before I show the results, I want to show you that I was in Holland, I was in the Netherlands, in the Dutch market, and actually tried to get first glance, first touch experience with it. And so I'm sharing what we have seen here. Is it working like this? Yes. Yeah, so guys, I'm not a photograph guy whatsoever, but you can see here I was driving in Alfen. I had already goosebumps, I can tell you, not with this guy, with another, but you can see that's the new headquarter actually. There's the access of the substations, then the office track, the new office area. I mean, they have other locations, other subsidiaries as well, but you can see it here in quite long building. So I was honestly impressed. Of course, it's very likely smaller than an Amazon warehouse, I'm not sure, but compared to, you see even the building next to it. Maybe I do a break and go back. One moment. You see right now, even the building, there it is. Here we go. It's as well branded to Alfen, so I guess the whole district is more or less owned by Alfen. Now, but it's an industrial district and there are a lot of different companies presented. But Alfen is quite large, and you can see it here as well that even on the opposite side, top left picture here, a very small one, but a lot of smaller buildings are related to Alfen actually and branded to Alfen. You can see me, I did the photo from the left side to the right and from the right side to the left. And here you can't see it here, but this is the entry, as I mentioned already, or the point of transfer, the transfer ramp for the trucks which pick up the substations, the traffic stations. And yeah, so it was quite impressive for me. Actually, I even contacted in advance the investor relationship department and asked if I can have a tour or something like this, even though it was just opened, this headquarters. But they answered me very politely, but they told me it's at the moment just not feasible, but in the future maybe. So, however, I was already very glad, and I was there for a business trip. I didn't travel from Germany to Netherlands just to make a quick video. I would do this for you guys, but honestly, in this case, is not the truth. And last but not least, what I want to show as well is here one of the charger solutions, which was positioned in one of the hotels I stayed. and I can tell you that you can see them in a lot of spaces there, a lot of places, a lot of places. Yeah, no matter if this simpler one, let's say it like this here, or the more stronger ones, quicker ones, let's say it like this. I mean, they have not in their portfolio fast chargers. That is what I need to add. They have slow ones, which is something like, I hope I'm not mistaking it, even though I'm driving an electric vehicle, I'm not a professional in it as well. So I think they have 11 kilowatt and 21 or something like this kilowatt hours. Yeah, so that's quite compared low. That's the standard ones. Those are the ones which you can find everywhere in the public areas in Europe, at least, let's say this, or in a lot of areas, a lot of cities. And the large ones, the fast chargers, are regularly located in the at the highways. So you quickly do a break after 20, 30, 40 minutes. Your car is charged up from 20 to 80%, and you go on with your trip. Yeah. So that's not what they cover. They cover more the regular stuff. When you go shopping, you park your car, and when you are back, you have 10% more battery capacity, and this kind of stuff. Not capacity. The charge status is 10% higher. Okay, guys. I mean, that is my footage. I tried my best to make it to provide on a good level, and it was really, it was for me a very, very positive experience, honestly, guys. And so yeah, I can only recommend, if you're investing in smaller companies where not a lot of footage is existing in the World Wide Web, to visit it by yourself if you have somehow the chance to combine it with another trip like I had, luckily. And was definitely a pleasure, and in the future I will be quite often in the Netherlands for business, I think. And so in this case I keep you updated, and as soon as I do a tour I will for sure make some further footage. Yeah, but I don't think so that will be possible this year, actually. Okay, guys, so we have this, we have that. Now we go on what I've already mentioned to you with the earnings results of the past year, and I can already tell the Alfen price is rising by 2.7%. I can share as well the screen. So it's 2.73% up, as you can see here. And let's see if results are already released. But I don't think so. That is very, very unlikely. Oh, it doesn't look like this, I think. No. Okay, we are a little bit earlier, but we need more time. Because there's further input I want to show you. As already mentioned, we go on with the latest earnings results, Q4 2023. So here we go. I need to make it a little bit smaller, I think. Zoom a little bit out. There we go. So what we have here, I mean, I rated it overall. You can see it on the first glance on a neutral level, yeah, which is, in my perspective, I think I am rating most of the companies more negative than other analysts, investors. I think when I take a look at comments after earnings results. So I think neutral is already really okay. I mean, I'm bullish to these companies, and neutral means I stay 100% bullish. Nothing has changed. Yeah, and positive means I'm getting more bullish even. And negative, of course, I'm swapping a little bit to the negative dimension. Yeah, so that is what I'm doing. Okay, guys. So as you can see here, everything, I don't want to go too deeply into the metrics in general, but revenue, profit, outlook, everything looked quite well. The development of the different product segments, there was not any really bad in my perspective, especially because my feeling was it's recovering quicker than expected, because I already mentioned EV chargers dropped very heavily. They stated that 2023 will be a gap year officially, and they adjusted the guidance. Yeah. Maybe I show this as well quickly. I show it later. And so everything was what was on top. I took it not for granted, and I appreciate it highly. And actually that was the case in terms of Alfen for the past 2 quarters, not just for the latest one, but latest one was good as well. what I took a little bit more negative is the adjusted EBITDA margin. I mean, actually it was negative. Yeah, you can see that 1 year ago 18%, 2 years ago roughly 15%, and the last quarters, okay, it increased. That's a good sign at least. Yeah, it come back, it's recovering. But on the other hand, 13% adjusted EBITDA margin is really not a lot. I mean, okay, it's an industrial company, they are manufacturer, it's regular that they don't working with the same margins than a software company, a SaaS company or whatsoever, yeah, but still quite low. That is something what we need to consider. And yeah, but they promised already coming back, and you can see in the revenue outlook they stated a very solid revenue expectation of 24% year on year, I think, but they showing in the results a CAGR, so a growth rate of for this year for the market in general, the market, yeah, the average in the industry of something like it would result in 32% growth year on year and 666 million euros. So I think it's not that unrealistic to achieve this, and that's actually my expectations, this 32% year-on-year growth. And what I like to see and very love to see is that this EV charger drop stopped a little bit. Yeah, so Q3 to Q4 2023 start to grow again by 10%. Maybe it's seasonality, you never know, but the management itself stated, okay, it looks better right now than 1 quarter ago. And what is great as well, they're really working on their business efficiency. You can see they're achieving or try to achieve positive free cash flow positivity. And you can see the past 2 years that wasn't unfortunately the case. Maybe because we are already sharing the slide deck here, some information about the evaluation compared to the other stocks and companies I'm a shareholder of. And you can see I am expecting, even though I calculate with 32% mentally, when I calculate about with the valuation or want to try to find the result in terms of the valuation of the company, I calculate with a mix for 2024, 2025 of 23% per year. EV sales 1.3 is currently, so they have a little bit cash in the back. Then the data is 15 days old, not that old, but just that you've heard it. Then we have the price earnings ratio, which is of course a little bit lower when we combine 2024, 2025 and considering already a little bit growth. And all of this results in a quite appealing fair price multiplicator of 3.8. Again, that doesn't mean that it's multiplied with 3.8 the current price. That's not the message of this. The message is that you can compare to other companies, and something like PayPal, for instance, is below 1. Uber is below 1, I think. A lot of Nvidia is something like 0.3, 0.4, or I'm not sure, maybe even higher now because they're really performing. I need to check it. But the message is, and that is the reason why it's background colored in green, next to Hims and Hers, even though Hims raised today very strongly because of a rollout of new medicament type for weight loss, and it changed heavily today. But Alfen is really cheap, and now I think, from my perspective, the cheapest stock. From my perspective, cheapest stocks I'm a shareholder of. And it's getting even cheaper, as you can see here. And I personally, it's my third, as you can see, it's my third favorite company I'm a shareholder of, after Hims and Hers and after New. And even though it's the third position, it's the second largest one, and with $16,000 US. I mean, now Hims and Hers is something like $40,000 US. It's growing heavily, you know. But then right after $16,000 US is Alfen, yeah, and then New something with 14,000, I think, yeah. So then everything is more or less 11, 12, 13,000, something like this. So overall, 90,000 and something US portfolio. And I purchased initially in July last year, so almost a year I'm a shareholder of, and I invested further times in the falling knife, yeah. So when the price decreased, And I think at the peak low, I was in the red with 30%, and now I'm still in the red with 8%. But guys, I would still purchase it. I would still make a position. I'm convinced about this company. You never know what the future brings, but that's just the case. And honestly, guys, I want to tell you way more, but I guess let's check quickly what is going on with the what is going on with the results. Here we are. Oh, and it's released. You can see it. We don't check the price. We don't check the price. I always prefer to not check the price. And I will, let's say, 10 more minutes. I will brief a little bit about the news history, so you'll get a better feeling for the company. Because maybe you are from Asia, maybe you are from America, maybe you are from Africa, wherever. And you see this and you think, boy, I never heard about it, but sounds interesting. So I want to provide you something what gives you a little bit more color about it, yeah, that you just get simply a better feeling for it. So one is, of course, for instance, here what I already mentioned. These are the growth, the growth rates for the markets for 2024, 2025, at least let's say in the future, yeah, and you can see per year. So the compound annual growth rates, and you can see that. In terms of the substations, it's 21%, EV chargers, 18% market, yeah? And energy storage, 58%. And I mean, I expect from Alfen, for a company which is, I'm just convinced of it, it's in the upper 30%, or let's say like this, and more in the lead, has a good strong position, has already a large customer base with strong key accounts, who have a lot of financial power and budget and just waiting to order more and more equipment from Alfen, yeah? Next to new potential business with new customers, yeah, and you can see, I mean, both is very solid, smart grids and EV charging, even if they just can't cover the CAGR. But what is quite impressive is as well the energy storage development. I mean, 58%. I can tell you that we will see it in a moment. Alfen growth on a whole nother level in the past quarters, especially in the last year, whole nother level. However, 58% is very strong, and you can see here that Italy and United Kingdom is growing, has a huge demand. And today I investigated, I've tried to figure out what is the reason, why is this demand existing. And you can see why is Italy the new hot BESS, and BESS stands for Battery Energy Storage System, yeah, BESS, so you just heard it. And you can see that what is the reason for UK. You can see here, most active advanced of all European countries regarding energy storage. And here's the reason, basically. The relatively high penetration of intermittent renewable energy and limited interconnection due to the island location created a thriving market. So, I mean, they of course a little bit clustered. The electrical grid is not perfectly shaped, like in all countries very likely in the world almost. Beside the small one city countries, yeah, like Singapore, whatsoever, electrical grids are always bottleneck, and so they try to cover this with their solutions. And in Italy, I think it's quite similar actually. You can see it here. It's a little bit different. You can see that Italy has a high focus on electricity. Electricity sounds wrong. However, in power generated from natural gas sources, and they don't want to be dependent and rely anymore of imports, as you can see, and so they try to create a huge amount of battery systems to have more deposited storage and capacity resources, yeah, if there is a need, yeah, in the backup, yeah. That is the reason why it's growing that heavily. That is the reason why 58% CAGR is existing in the energy storage space. And maybe to add this as well, that you've seen it quickly because it's right here. So they are, even though they're providing the substations only in 4 different countries, they are active in terms of each EV charging solutions in a lot of different markets, and battery storage systems, it's basically the same story. But I mean, the larger the hardware is, the more expensive, the longer it takes the sales process. There will tender get announced, you need to apply for it, add a lot of information. Maybe you need to adjust the solutions, adjust the software, and the installation, planning time of this project, everything, the decision making takes more time. So rolling out EV chargers in Europe, it's like this very likely, compared to rolling out substations or rolling out battery storage systems in whole Europe. That's another story, I guess. But they are active, even though it's getting a little bit back. Okay, guys, and then we go quickly through the news right now. The latest news history. We start here with the Alfen finally and celebrating the headquarters opening in Almere. Actually, the location I was. You can see here the same photo. I mean, I think my photo is more beautiful. Yeah, you can compare it by yourself, what you prefer, but I think mine is more beautiful. No, however, it doesn't make any difference. But the grand opening took place on time. Very happy here. You see the CEO of the company. Then what we have here, something in terms of the EV charging solutions, and there are new laws, how they need to be equipped with payment functionality, for instance, that you can pay with your card everywhere, and you don't need to always have a specific app or something like this. So these are new regulations, and Alfen are already covering them in a very advanced way. And this is something, of course, which can differentiate their business as well, or their solutions as well, to competitor solutions and protect their market, let's say it like this. Then some news I want to show you, that you get a better feeling for it in terms of the substations. I mean, that you know it's not really some small stuff. I mean, it's always a 6-digit number, this kind of solutions, especially the large ones, yeah, let's say it like this. And you can see that this substation, very likely it's the larger one, or maybe the largest what I can offer, I can imagine. But however, it's actually 176 tons of material in the substation. It's crazy. I mean, a lot of concrete, of course, as well. However, that's huge stuff what is going on there. Yeah, it's just connected to a lot of effort to install this kind of stuff. Then some more information about the BESS, so the battery storage solutions, and you can see here that they installed them in a project at Sweden. So this is how it looks in reality. Yeah, you have seen it one time. Or a partner of Alfen Green Power Solutions, they installed it. Look, this news is only 4 days old. They installed it at the Cannes Film Festival, movie festival in Cannes in France. And you can see these i7 BMW cars, which are moving the stars from A to B. They have been charged with a setup of Alfen, provided by Alfen. So first of all, this Mobility X battery systems, and then the chargers. Yeah, so perfect combination. This is something how it can look in reality as well. I mean, of course, that is very likely more an example, really, let's say a testimonial, a reference, yeah, for other for customers, what is possible, which you can use for promoting the solutions. It's not creating so much income, this kind of Cannes festival, but it's an example how it can look. And that it works, and you need this kind of pilot projects, this premium, groundbreaking, news-driven experiences and stories. Otherwise, it's not working. Maybe a quick look on the competitors. You can, or not on the competitors, actually, on other layers in the energy market, in the sustainable market. You can see first solar. So all of them are producers of solar panels, microinverters, this kind of stuff. And you can see, like Alfen, they are very solid. Okay, they are very solid. They just had a small drop a year ago, but they are very solid. Okay, I didn't check it actually before, but when you take a look at charts for Enphase, a microinverter company, you can see they experienced a very, very heavy drop. Yeah, And I think the same is very likely for SolarEdge. SolarEdge is a little bit special because it's Israel located company, so of course there's a lot of trouble going on at the moment politically, war-wise, and this kind of aspects. I don't need to focus now, but however, still it shows that the industry is not like grinding new peaks and new highs like a lot of other companies. You can see here, year on year, it's even a little bit down. Even First Solar is way more stable than the other ones. Yeah. Okay, and that's last but not least. I want to quickly focus on the expectations for this call, and let's go straight in it. What kind of KPIs, what kind of metrics and parameters we want to focus today. So in general, always for me, top and bottom line is an aspect I need to consider. So revenue, top line, EPS, earnings per share development, bottom line, always important. And then, which we can observe as well today, is the short-term perspective. We take a look at the reports and look how the numbers are in terms of the rollout of sales of EV chargers, substations, and battery systems. And then the second position is the business efficiency. I already mentioned the adjusted EBITDA margin is quite tanking. And if you can already recognize that positive free cash flow can get acquired. I mean, I'm quite positive that even though they're told it's a gap year 2023 and first half as well of 2024, and they will recover or come back at the third quarter this year, I can already mention that today some positive stuff is going on. Yeah. So, and the last but not least, the last metric we cover today a little bit more in detail is the regional expansion. It's not 100% important for me, but a little bit more diversification in this regard is never negative. And honestly, if the international expansion is going up, then that's a sign as well that EV chargers and a little bit as well battery storage solutions get a little bit more successfully promoted than in the past, because that's more the international business. And you can already see it here, the ramp up of the factory. If it takes place, we see, I mean, it's existing. I touched it, but we don't know how good it is working. We will see what will be the performance of this and if they talk a little bit about it. And then, of course, the revenue target achievement for what they have stated actually as a mid-long-term outlook. Between 2025 and 2027, they want to reach a revenue level of 1 billion euros or 1.08 billion US dollars. That's not that easy when you perform like in last year, what you will see in a moment, but it's still very, very realistic in my perspective. And then, of course, long term, we always need to consider what is going on with the subsidies, with the funding programs of the EU. It's getting really pushed forward, especially now by the EU. And this is, of course, as well very promising for the substation business of Alfen. And as well, I mean, in general, the governmental support. Yeah, I mean, there are a lot of drivers by the government, and especially Europe is really focused on this kind of stuff. That is what I like about it. I mean, there are a lot of really attractive companies in the US or in Asia whatsoever. From my perspective, it's the sustainable, eco-friendly energy provider, power generation companies whatsoever. And so for me, Alfen is really top-notch in this regard, in a market which really blows it forward. Yeah? It's like when you compare it to Grab, the Uber out of Southeast Asia. I like the market as well. I like the population density. I like the growing economy and the GDP per person, which is growing as well. And so that's what I see. Go into the Excel. Maybe a little bit awkward, but it's an important document for today. And you see that I separated in the three main drivers: EV chargers, substations, and battery energy storage systems. And for the past 3 years, yeah. And I don't want to go mid-margin and battery systems are low margin. And you think, maybe that's not that important, but it's an important aspect because the expected revenue growth in terms of battery energy storage systems, you can see it here. That's the CAGR, which I took out of the full year presentation of Alfen 2023. This is the expected CAGR of the market, and you can see that storage systems grow by far the strongest, and especially at Alfen. Yeah, I mean, last year, you can see it here, they achieved the year-on-year growth in energy storage systems by 254%. Yeah, crazy. And the year ago already 156. So I could imagine that they will peak this year. So it will be a little bit lower, or even stronger lower, even only 100% or something like this. We will see. But the problem is a little bit like when they're selling more and more of this, the overall company-wide margin goes lower and lower because those are the low margin products. And on the other hand, EV chargers not getting sold so successfully, or the selling process is not going so well at the moment. And then are the high margin solutions. Yeah, so of course it's some kind of diluting their own adjusted EBITDA margin, even though if the result overall might be better on an absolute scale, on a relative scale, in percentage, it has a negative effect. And what I want to focus as well, very quickly, even though you can't see the bottom part so good here, I can go a little bit down. You can see that in 2021, Substations, that's the reason why I marked it fat. You can see this was, in terms of revenue share, the strongest position, yeah, with roughly half of the overall revenue. And storage systems basically didn't exist. 1 year later, EV chargers overtook crazy. You can see here, they had a year-on-year growth with 100 or by 190%. Yeah, storage even decreased a little bit, but EV chargers was crazy. So it was not like Substation was so weak; it still grew very solid, but the EV chargers just simply went crazy. Yeah, with 189%. And then in 2023, you can see, I mean, changing from Substations, the best-selling good in 21, to EV chargers in 2022, and back to Substations with 37%, roughly 40%. I mean, it was quite equal, 30%. I like to see this. Yeah, that's for me really a great diversified product portfolio. And why was this the case? You can see it here. Year-on-year growth was minus 15% in terms of EV solutions. And comparing it to... it was just a quarter. Sorry, guys. Sorry. And when we take a year-on-year, it was minus 40%. So you can see minus 40%. Yeah, so in the mid of the year it peaked and then was a little bit more relaxed at Q4, but minus 40%. And on the other hand, storage systems, they really try to cover it, and they can cover it in terms of revenue, or very likely they will cover it in the future. But in terms of margin, one more time, in terms of profit, that's difficult for the BESS solutions. BESS solutions. Let's call it from now on batteries. I think that's the simplest way. And so what is my expectations for today in terms of the numbers? Look, guys, the outlook by Alfen is actually 625 million euros revenue. And I basically ignored this. I'm calculated everything based on the market CAGR. Here, what I've entered, as you can see, and this was, and then I multiplied this with the former revenue of 2023, basically. Let's keep it simple like this, I would say, and then I've added as well opinion, let's say like this. I mean, everything is not fact, it's just my view. But then I added another aspect, and this is that I think, or my target is that with the first quarter, they're covering 23.5% of the expected revenue, of my expected revenue of 666 million euros. Hi Jacquet Trion, nice to have you in. Nice to see you are invested in Grab and New and Hoot and Onom and KNSL. I need to check it out by myself. Thank you very much, man. I do at the weekend. I think next weekend I would do for sure some research about it. And if it's interesting, maybe I will focus a little bit more. But I need always a little bit of time for this. However, I quickly go on and then jump into the numbers of Alfen. So I expect that you can see it here. In Q1, they're covering 23.5% of the expected of my revenue target, then 24, 25, and then 26.5%. So they're really charging up and reopening the business, and strengthening the pipe, and so it's accelerating quicker and quicker over the year. That's my expectation, yeah. So, and the result of it is, and that is for me really, it's simple. It's simple. I'm investing in Alfen. It's a blend a little bit out of profit growth and revenue growth. But if you would ask me, I'm basically buying it because of revenue growth, basically because of the story overall and the possibilities. And so in this regard, these are the three numbers which are core, which are the key. And I want to see EV chargers, 42 million euros, substations, 53 million, and batteries, 61 million. So this will be the first quarter. I think it's the first quarter where really, oh no, it was already last year. You can see here it was already the first time batteries was larger, had a larger share in terms of revenue than substations. But this will really be, when you compare this, I expect really a strong beat in batteries still, even though on a certain level you will peak, but I think the peak is not here right now. There's still a lot of room for improvement. I hope that EV chargers is coming back one more time. You can see it here. It was 38 million in Q4 2023. So 10% more, just slightly raise of substations, but let's see as well, the demand is definitely present, and battery by far the strongest absolute and relative growth. Yeah, that is what I would like to see. Yes, and I would say we jump into the numbers. I mean, we could go. Should I share this or not? Yeah, I mean, Jack, I can only tell you have good picks as well when you are invested in Grab and New. So thank you very much. Highly appreciate the kind words. But however, guys, I will go on now and we will jump. I would say really we jump now into the results. It's really time. Oh, you can see already stock is down. I didn't want to have any. Oh, it's another one. Okay. First Solar. Okay, guys, still didn't check the price, so I want to, as I mentioned, I want to keep it spontaneous. One more time I update it. And now it's time for the first superficial kick-off screening, let's say it like this, to get an idea. So one more time before we jump in, because those are the numbers we need to keep in mind. One more time, you can see 156 million revenue per quarter is my target, 42 for EV chargers, 53 for substations, and 61 for batteries. That's what I'm looking for, what creates good conviction and confidence in terms of Alfen. Okay, so. And now we start with it. Sun is already going down. Actually not. It takes I think 3 more hours, but somehow we need to finalize the stream, I guess. So let's go into it and into the webcast to see everything else is not publicated yet. So I have strong hopes, and again I like it. But it's with all my investments. If it's really going in some awkward direction, I'm out. It is how it is, and I can be a little bit more patient. And actually, Alfen is a stock where I'm invested since almost a year, and I knew it takes more and more time. But really this year, and especially in the second half of the year, I want to see that they are performing. Oh shit, that's not a lot. I can already tell. That's really not. I mean, I wanted to see 156 million. Yeah, either my calculation is very, very, very bad, or you can see it. You can see it already. That will be a strong hit to the stock. I mean, if I can already tell. I mean, it's my last earnings live stream for this season, for this quarter, and so far it was good. But I can imagine that this one gets a strong, very strong hit right now. Yeah, actually, forget everything what I told you guys. Don't do further research about it. Just skip this stock. No, maybe I'm missing something. But why I'm telling this? Because I mean, 3% growth and revenue, that's already very negative. But really, smart grid solutions, that's great, 32%. I mean, I think that's even stronger than I expected. But energy storage minus 8%. Minus 8%. That doesn't look great, actually. And EV charging minus 16%. It's not that negative. But really, this one here. This is already, I mean, that's the high hope candidate. It's the rising star. And here minus 8%. While I was expecting a year-on-year growth. While I was expecting a year-on-year growth, or I hope for it, of 142%. And they achieved minus 8%. I can cut out this experience and promote it as a short video because it was that. It really feels like an accident. But maybe I'm missing something. Margin stable, or adjusted EBITDA as well, quite low. You can see. Oh yeah. I mean, it's part of the business. Sometimes you lose, sometimes you win. Yeah. Today, when you take a look at Hims and Hers, I really achieved good money by it for today. Or yeah, good performance. I think the stock is up 30%, and Alfen maybe it's now down 30% or something. But maybe I'm missing something. Okay. Yeah, they have an interim CFO, something what I need to mention. They had selected one other person, and then after a trial period, both parties, this potential CFO and Alfen itself, they decided to split and separate and go, separate the business-wise. However, let's go already into the details, I would think, and see what is going on here. Man, that's not good. That's not what I expected. Really not what I expected, man. That's it is how it is, man. What do we have here? So, can you see it? Yeah, that looks good, I think. In the business line where after... Yeah, okay. EV charging is not the problem. This is not the problem, but really batteries. That will be a... That's difficult, I think. From outside of the Netherlands, that's great to hear. You can see how international the EV charger business is. Yeah, okay, that they're still declining is okay. I mean, that's nothing new. They expect a growth of 15%. Yeah, and I think you can see here the new regulations, what I've already stated, this European A4 agreement. Let me quickly check. But 15% is still, I can show it to you, but 15% is still under my expectations, or under the CAGR, below the CAGR. Yeah, you can see 18% is the CAGR, what they stated by themselves at the last press release, and now they're stating for the full year 15%. I mean, lower than the market CAGR, yeah, if I'm not misinterpreting something, yeah. So you can see we can already change this. It's 42 million, what I've expected, and they reached 39.3. It's not a big miss, but it is one. And now Substations, it's really like a striptease, you know. We go carefully, a little bit lower and lower, and then, as you know, I have always my equipment with me if I break down in tears. And today I'm the closest time to start crying. No, I'm of course kidding, but just kidding. But really, that's it's really bad, man. Okay, then smart grid solutions. I think that's as well light at the end of the funnel. At least something very positive. Growth stronger than I expected, even though it was not really a heavy beat compared to my expectations. Yeah, okay, that's great as well. Yeah, you see that the grid operators, really like the large one like E.ON, RWE, EnBW in Europe, they're really going for more and more a higher need of substations to production of stop for line. Continues to expect roughly 20% revenue growth. Yeah, and 20%, what I expected was, so 20% full year growth. Again, okay, that's at least in line, because you can see here, that's more or less the CAGR, yeah? That's more or less the CAGR, at least something positive. And with revenue of 50, okay. So that's actually a beat, even though it's a very small one, but that looks good. And maybe we should just finish the call at this point in time. That would make it a little bit simpler, actually. I just want to talk about this. Look, in the news area where I can see it, here in the investor relations area, they mentioned Alfen resumes supply of Pacto transformer substations. So they had some issues actually with moisture, with water, with liquidity in it, and because of this, they need to stop selling it and working on it somehow. And now they even go to some already installed solutions and need to adjust it so it has no issue anymore with this moisture. And you can see that they here already mentioned as 20% revenue growth. I hope you can see it. Yeah, looks good. And they mentioned that it will cost, I think, 5 million to solve these issues if everything is covered. And they right afterwards, the price went back on a great level, because, I mean, before there was a lot of uncertainty existing in terms of the substations. Here it's 5 million here. And afterwards, the market understand, okay, it's 5 million, it costs money, and it's a lot of money for Alfen actually. I mean, they're doing good revenue, but again, the margin is quite low. However, it's a one-time cost position, and they found a way to solve it. I mean, that's the largest or most important message of it. Okay, now the sun is coming. Oh, that's not really helping a lot. However, I tried it at least. Let's go on, and yeah, we need to face the truth. We need to face the truth, man. When you are already over the point in time when you want to cry, then you start smiling like me, but internally you're dying. So here, what is going on, guys? What is going on? I'm really interested in it, because that was really something unforeseen, I think. Yeah, okay. The prospect for this business line remains strong. In this quarter, the volatile revenue profile quarter-on-quarter reflect as timing of revenue recognition milestones. Yeah, I mean, you see, I mean, yes, there are large investments, and you always need to reach these milestones, very likely in these projects. Yeah, like whatever, shipping readiness, or let's say contract signing, then shipping readiness, then arrival of the hardware at the construction site, at the wind farm or wherever, in terms of battery storage solutions. Then basically installation or commissioning, and then acceptance and approval by the customer. Yeah, these are this kind of milestones very likely, or roughly the milestone chronic. And sometimes maybe it takes some time, and based on these milestones, the company Alfen gets paid for their solutions. Let's say 10% for signing or 20%, and then another 15% at shipping readiness, and that. You know, these are different stages, and I think that is what they are referring to it, if I'm not mistaken. Let's go on. But that's not for me explaining the whole situation. Really not. Oh, and here you can see, and that is something really, I mean, from China, for instance, and they're providing as well a lot of battery solutions, and very likely way cheaper, you know. And if the Western companies, or like the grid providers or owners, the wind farm owners, the solar farm owners, if they start to consider them at tenders and basically accept and adopt to their solutions, they are, from the price perspective in this regard, very, very competitive. Yeah, and I mean, it already happened with the EV chargers, but luckily it's getting a little bit back on track. Yeah, even though it's minus. Again, they had really more negative momentum last year. But now it happens as well with the storage systems, I have the feeling. I mean, 40% revenue growth. Again, I mentioned last year it was, let's check again one more time. It was, so here we are, 254% year-on-year growth. And now only 40%. Yes, of course, it's difficult to cover this momentum, but something like 90 to 110% I would be very happy about. Just my feeling, that would be my feeling. That would be a range where I think, oh, that sounds okay. Yeah, that's satisfying. But that actually didn't took place. Yeah, so we need to be serious about it. However, I can already add the number. So it was 23 million. And one more time, if you are not used to the stock, maybe it doesn't sound bad, but 142% to minus 8%. I mean, regularly I'm quite good with my expectations in terms of revenue growth. And I mean, this time, honestly, I just used the CAGR, which was provided by them in the report. Yeah, it was not like I was that creative, and I kept it very simple. However, still, I orientated on it, and I thought, might be a good catch. However, I mean, that is where all the doesn't look too promising for me, guys. I need to be honest. I mean, they're telling that it's going down in line or in hand with the EV chargers, more or less, or with the EV sales. Yeah, with the EV sales, not the EV chargers. But EV chargers, the EV sales in general. So the car industry has a little bit issues with the EVs. Funding programs running out in this direction, even though they are existing in some regions. And they are confronted with a little bit more headwind, yeah. And they're telling, look, that goes in hand. EV sales drop with the batteries drop. But that's okay, right? That's something what I accept. What is difficult for me to accept, honestly, is the response to lower prices. And they tell, yeah. Yeah, I mean, they tell they are good prepared for this stronger, if I'm not misunderstanding the sentence, yeah, but they're telling they are well prepared for the situation with their solutions. These are the stationary ones, not the mobile ones, and not sure, man, because Yeah, I'm not sure, honestly. That's something negative, really, really negative from my perspective. Okay, let's go on. Based on the status of pending projects, the deals that are close to being awarded often sees ESS revenue growth. Okay, they're telling, like I already mentioned it, that really second half of this year will be the gap year will be done and it's recovering and everything. But you see what look, guys, honestly, 15 minutes ago I was a convinced shareholder of Alfen, and this happens very rarely, yeah. And I still like the industry. I still like the solutions. I like Alfen, yeah. But it not makes me nervous or whatever. But it definitely creates concerns that the business in general. Yes, Alfen is high quality, is legacy outside of Europe, but they first had trouble with EV chargers. Now they have a little bit trouble with the storage systems. Substations working well so far, and we can be very glad about it. I mean, it's even grows quicker than expected, and actually it's now by far the major driver in terms of revenue. However, it's not that nice. I mean, I like to invest in leaders, in companies which are in a leading position, and I have to. Alfen might be in a general positive position, but it's a little bit like in the automotive sector, and I was invested in a semiconductor provider for the automotive sector, which is called Infor Cars, and basically I sold as well there my complete stock because it might be the case that's the same here with the new renewable energy sector. Yeah. However, I think. Because I want to be honest with you and just open my thoughts and share my idea what I'm currently thinking about. But look, I don't want to invest in losers. And maybe Alfen needs to take more time, or takes more time that they recover. And I expect I will not sell it tomorrow or something like this. But after an earnings call, I was never that close to sell a company. It sounds really awkward, I know, guys, yeah? And I very likely will stick to my shares, very likely. Now already, they didn't. Not close. I mean, as well, let's take a look at it later, but yeah. Go through it. I would say let's go through it, and then we check how the market reacts, I would say, yeah? But really, so far, for me, it's not that nice. Not because of V chargers, not because of substations, just because of the storage systems, and 40% year growth really means, I mean, what they stated when we really take a look on it, 40%, man, crazy, man. Yeah, it's not that far below the CAGR, however, I expected still way more. And maybe they adjusted one more time, you never know. Yeah, maybe they telling in Q3, sorry, there's another delay and the competition is larger than expected, or whatever will be the reason. And I mean, they have a new headquarters, they have more production power, manufacturing power, and they need to utilize it. Everything else costs money for this company, yeah, and they hired very likely new staff members and all this kind of stuff, yeah. So they need to perform. It's simple like this. They need to perform. In this regard, all the different segments need to work as well. The storage segment, but then it's how much did they achieve last year in revenue, and 40% of it is something like, say, 230 million. Maybe they felt it already. Maybe they knew it. And that's the reason, I mean, I was calculating wrong with my 666 million based on the communicated CAGR, the market development. And they stated just a mid expectation of 625. And I mean, with, let's say, 40 million less, 40 million, we are more or less on the level of the outlook. Let's see, I'm really interested how the market reacts, but most of the time I'm rating. I mean, depends. But I take the results more negative, rate them more negative, but I'm relaxed afterwards in terms of price. I'm not sure if we can see after market prices. Yeah, after closing prices. However, that's how it is. Let's go back and let's go on with the screening of the sheet. I mean, positive free cash flow, and they stated in the outlook for this year they want to have an adjusted EBITDA margin which is higher than 11.3% and a positive cash flow, free cash flow. So that's 0.2%. Man, that's not that nice. I mean, let's go back to PowerPoint and we can already start to rate it. I mean, revenue and EPS wise is, from my perspective, I mean, let's share the screen one more time. From my perspective, I would rate this one as, how much was it? Minus 16%. I expected minus 10%. Yeah, it's not that bad. However, I rated negative, really. That is what I rate positive. This is what I rate positive. The substations were, the result is better than expected, and one more time, negative. Definitely very, very red for the batteries, and of course, as well, the overall revenue is negative, as you can see, and so we transfer this information into the verdict chart, the verdict sheet. So EV chargers red, substations green, but battery for sure deep red, in my perspective. Let's see what they can do next quarter. Okay, they told second half they will be back on track. Let's see if they can make it happen or not. But oh man, I will not earn any money today, I guess. That will be heavy. When I read through it, I didn't check the price yet. Then I will make an assumption and guess what I think, how much the price dropped, and maybe we can see already now 8.2%. I think it was. So I didn't have this negative experience. I think, really, I didn't have this experience. So yeah, 8.2 million. But let's see, maybe I take even some or use some money and reinvest it in Alfen. Maybe I think now it's even cheaper than expected. Yeah. Okay, Ono Knapp, we already have it or talked about it. Outlook, it's already done? That's it? Okay, that's a short one. Okay, let's see what they're doing. Yeah, okay, that's at least something like this is existing. Business line, continuous invest in organization, product lines. That's very short, man. But you can see that they're confirming really adjusted EBITDA margin of higher than 11.3%, and the revenue outlook. There, I'm very happy. I mean, I hope they don't do this in last moment in 3 months or something like this. Can happen. I mean, they did it already in the past. Let's take a look at the investors relation news section, and you can see here, just a few days in advance of earnings release, they announced in August that they will adjust their guidance from, let's say, 570 million to 505 million. Oh man, that's a gamble. That's a gamble. Okay, let's international expansion. I didn't give any information about it. I mean, what I don't like so much about this. Okay, it's the first quarter results. in press release and not the full year. But when you compare full year, look here we have full year. Yeah. Or wait, let's do it like this. This is Q1 2023. So okay, some information. But here they already give some more information about the 3 core segments. Okay, that's same. Then medium term targets. Okay, that is what I talked about it already. You can see 50 to 20% EBITDA margin. Let's see if they can manage it or not. But it was good. It was not a big difference, but at least there was some more content. And what I learned from period networks when I lost really a lot of money a month ago, yeah, I learned that I need more information. I want to see information. That's just important. And as soon as the management is not communicating so much information, that's not adding so much value to me. It's a black box, and you already the negative rumor starts to grow. The analyst starts to think, oh, what is going on with this and with that? And when you have no enough times, your creativity, the scenarios you develop in your mind mentally, they are more negative than actually the reality. Yeah, and that is of course very bad in the stock market, where people, they have assumptions, and when those assumptions are more is basically, or even then reality is very negative, but they're not talking about it, then I don't like this too much. However, really, today's earnings release result, we can only, look, Jack Trion, I'm not sure if you're still in the chat, but you told that I have good picks. This time I'm not sure. However, this is what we leave out. Yeah, not today, but all we have is red, and I can keep it so short. Guys, look, that's the most clearest negative rating I very likely ever provided. And the reason for this is maybe, honestly, because the last quarters went surprisingly well. Yeah, maybe if they would gone more negative and not surprised that positively in terms of revenue, in terms of margin, and in terms of the storage systems, maybe it would look different. But it is how it is, and then you have expectations. The expectations, they grow because of your surprising positive experience this quarter. And I had it. I could tell. I had it already in my feeling, almost my bones. Of course not. It's not about feelings. It's about investment. Yeah, we need to be serious about it. But I really expected more positive outcome, and for sure it's not. Okay, when they can stick to the outlook, when they can stick to the margin target, when they can stick to the timeline for 2023, especially in the second half of the business year, in terms of pricing in the storage space is not that nice. Don't like it. I don't like it. And I really hope that EV chargers recover. I hope that substations recovers. And then I hope really they somehow cover this. In terms of the storage systems, they reach those milestones to receive the money whatsoever. They can roll it out more aggressively. And latest next year, they recover in terms of storage systems. And it's not that negative. It's still 40% growth. But however, that was not the expectation. Yeah, maybe let's quickly check together what was the expectation. I think they stated it in the last full year press release. What is the expectation in terms of? You can see here 260% growth year on year. Market momentum remains strong. Did they state something more to it? Yes. Maybe I was a little bit blinded by this CAGR. I'm not sure if they. And I still like the product setup very, very much, man. Especially in Europe, I like it very, very much. Okay, so they didn't state any specific outlook for, if I'm not mistaken, for the storage business, for the battery business. That's their luck, I guess. That's good for them, but yeah. Okay, I mean, let's go back. I think there's not so much to miss. Actually, it was quite simple when we talk about the results. What I'm happy about is really they're reconfirming the full year revenue, the margin, and still free cash flow outlook. But you can see, look, they have been surprised as well. But energy storage will likely be less than 40. A little bit of time. I don't want to make quick decisions. But who knows? I mean, later on I have 2 more hours or something like this, or a few more hours till I go to bed, and I will think about it a little bit maybe. And then I sleep over it, and maybe I sleep a few more times over it. But there are really three different scenarios I have in mind currently when I talk about the stock and my relation to this company and to the stock. Yeah. First of all, why I drove there. What was this idea? I should visit everyone else, but not them. No, ever. Guys, I mean, they guided it that the second half of the year will be better. They approved, they told, they mentioned, they will stick to their outlook, what they mentioned a quarter ago. So nothing about this. I hope they will not surprise negatively with guidance adjustments a few days in advance of the next quarter result or something like this. I don't hope that will be the case. But really, I mean, 3 scenarios means I stick as a shareholder and then do nothing. Or maybe even I purchase further shares tomorrow, depending on what will be the outcome of the price. I will check in a moment with you guys together what will be the effect on the pricing of the stock. Or third option is that I sell it. Can be the case as well. Man, it's not that nice, especially because it was a solid one. I hoped it was a solid one. Okay, but however, let's take a look a little bit about the market reaction, and I'm not sure if you can see some after market developments, forecast and expectations of 140 million roughly, yeah. And so, guys, I mean, my bet on this one is that it goes down by. Maybe I should eat a little bit more in advance of this call. Maybe it's because I'm hungry. Can be the case as well. I'm a typical angry guy when I'm a little bit too sensitive right now. But I really can imagine that the stock drops. Let's say, and you can see that because of reasons which I didn't recognize in the past, it dropped somehow, yeah. And now they are, with the storage aspect, below 40% they are stating. They're not stating, doesn't makes me so confident about this company, really not. And I really hope for a good earnings call tomorrow morning. And the management somehow adding some information about it. But guys, I have doubts that this will be done. They can do it. Yeah. Therefore, I can imagine it's dropping by 10% at least, but even 25-30% I could imagine. I'm not a professional one. I don't have just my personal opinion as Julian, yeah. As a single person, as a private single person, I could really imagine that this drops because of this 25 to 30%. I guess at least 10%, that's just my guess. If I need to make a guess, if I need to set a bet on it, this would be my best about tomorrow's price development in terms of Alfen. And if it's not that negative. I'm positively surprised. I mean, what is great to hear that the outlook remains stable, and maybe I expected too high revenue growth in general based on this provided CAGR in the last documentation, earnings documentation. However, I expected too strong growth already at the first quarter of the business year, but again, I think the Alfen didn't expect it as well. So it's not only a surprise for me. And maybe my last step for today is, it's a German board where you can see, I mean, I never take this too serious because people here are really sometimes they're really aggressive with their statements, let's say it like this. But I just really want to quickly okay, so people are stating here that a lot of conservative political parties in Europe rising more and more, or even more the right orientated in terms of the political facts, and they're stating that when those really getting the power, getting empowered, and are the leading party in a country or something like this, they will make sure that EV or the sustainable business not receive so much funding anymore. After that was not a good decision, I think. And this person instead is mentioned. Instead mentioned that everything is already priced in or should be priced in. The Alfen was already valuated quite low, and it was already tanking in the past quarters and this kind of stuff. And this guy is just telling, okay, numbers are announced. Okay, I mean, maybe I'm alone on my island of sadness. I mean, it's not sadness, just joking, really. Life will go on, and really, I mean, it's basically more or less than planned. They didn't, like Period Networks, they didn't adjust the revenue outlook by 20% or something like this. Till now, everything is in line, no matter if you talk about revenue outlook, margin outlook, and free cash flow outlook, and that is way more important in my perspective than the details in this regard. Yeah, I mean, if the details would be fine, but they would tell, look guys, we miss everything, something is going very heavily wrong, okay. But this one detail in terms of the storage systems, they are tanking, they are suffering under the huge competitiveness out of other markets and based on the pricing conditions. And I mean, it was already, as far as I understand, a low margin business. I'm not sure if they have so much room for granting lower prices at the end, you know, and they are not sure how competitive they are in this regard. Yeah, and if they can't, I mean, they can't produce and sell goods which losing them money all the time. That's not a sustainable business, simply like this. And if no higher margins, or at least they can grant lower prices to the customers in terms of the storage solutions, but difficult. And I'm not investing into the stock. Yeah, I need to be honest here. I'm not investing in it because it's okay for me that one of three product types is always tanking. Yeah, like 1 year it's the EV chargers, and the next year it's storage, and the year afterwards the substations. That is not why I'm investing in it. I want to see that all three product type storage systems, even though they're growing 40% year on year, are confronted with some unexpected competitive level of competition. And let's see what the management of Alfen, let's see what the company itself can do with it, what they can do with their new production facilities, with more mass in general what they want to roll out. I mean, still they will achieve a revenue of 220 million. Yeah, let's see, man. I like the business, I like the company, I like the market, the environment of it, I like the products, I see the battery energy storage systems. That's not affected by this. But it's, you know, you have your investment thesis, and as soon as you have to fit, and no matter if it's tomorrow down, it will not tank by 10%. Yeah, I'm completely wrong, and it's just on a solid level, yeah, whatsoever. What I not expect, but that's not affected by this. I'm not, because next day I lost, you know, when Hims and Hers or whatever, what kind of company, Stoneko, I'm not selling it because the market is selling it. You know, I have my own opinion, I do my own research about it, and you see it. I mean, that's the reason why I'm streaming here, you know, because I want to share just entertain a little bit and share, of course, my thoughts about the stuff are. Yeah, even though again, you need to always do your own due diligence. But yeah, depending not on the market, the price development of tomorrow, but I definitely need to think about it. And it's not so much information what they have released right now. That makes it a little bit more simpler. Maybe there are further market reactions. Let's see what tomorrow in the management will communicate during the call. Very, very. One more time, I expect they are solid management. They will not state some BS. They will stick to the reality and will not tell no problem. It's. I think it is just real competition going on in this business in general, and especially in the battery sector and in the EV charger sector. And yeah, and just substations can't cover it at the end. You know, even though if they won very strong tender in the past, multiple tenders. And they are well related, but if these relationships are not working out and not covering the pricing situation or something like this, business case can be sometimes difficult. Yeah, and there are always great companies out there where you can invest your money more efficiently. Yeah, and I buy more shares. I don't think that will happen. I try to avoid the case that I sell my position in Alfen, but you never know. That's not a nice experience. But that's it from me for today. I mean, let me check quickly if someone is viewing. Cover companies I think which don't have a huge audience but which still might be interesting, and I still think Alfen is a very interesting stock. And maybe even, especially after tomorrow drop and a potential recovery, it has more potential than I expected a few hours ago. Yeah, so it might be still interesting for some of you. However, for me it was a little bit negative, this call today, as you very likely recognized. And however, I want to be very thankful that you've joined, and if you enjoyed this stream, make sure you subscribe to the channel and like the video, like the episode, and watch further stuff. If you are interested in, you can follow me as well on my social media infrastructure on X, on Instagram, and on Reddit. And yeah, I mean, guys, one more time, do your own due diligence, your own evaluation, no financial advice, no consultation, no guarantee for the correctness of the provided data. And